let's start off, guys. Before we jump into a lovely little discussion for today, I want to basically start off by introducing the Financial Summit. So I have seen a few faces who are all here and who have heard me say this numerous times. And Sebastian, we know you are joining us, and that's going to be for fun. So the Financial Summit is a 5-day networking event which takes place at luxurious resorts across the world, different places, different times. This year, we are going to be in Dubai in just around 2.5 weeks time, 2.5, 3 weeks time. You'll basically get to meet a lot of people from investment professionals, such as investment professionals, financial engineers, traders, family offices, hedge fund managers, and entrepreneurs. And the point to go there is basically to network, to meet these people, and grow your skill set. So we are limited to 50 to 70 participants, and I'm not sure what the current status of the rooms are, but if there are any, don't let us know. And if there are any, guys, this is the best opportunity to get in. Just a few weeks left. Come along. It's one of the best times you'll spend, and there's a lot to learn there.
Yeah, we're down to about 10 rooms left, guys. 10 rooms left. I actually sent off an email to like 1,000 people today. Hopefully, hopefully most of them are happy about it, and I didn't get a lot of unsubscribed. But I finally used, my personal email list of those that have, purchased stuff from me in the past or attended a workshop. So I just sent off like a mass email.
Wow. So, Tone, you know where we want to start, right?
Yeah, of course.
The whole issue, the whole problem, or the whole rumor that we saw for the Bitcoin spot ETF, which basically liquidated around $100 million worth of short positions in a matter of few minutes. So let me give you a small brief about what really happened. So it was like a proper market manipulation. It was at its finest, even though it was a mistake, but still it was massive, massive thing that happened. So Cointelegraph made a fake claim that BlackRock ETF was approved, and Bitcoin basically just pumped to 30,000 like there's no tomorrow. It just went 10% up. Next thing you know, they realized it's fake, and they edited their tweet to saying reportedly. Initially, that's what they did, and they did not put any statement out, nothing. They just edited the tweet and put reportedly. That led to the positions being closed, I guess, or profit booking whatsoever. Bitcoin started coming down. Next, we were basically up around 3% by end of the day. So what the reason I want to discuss this, Tone, is first of all, I'll give you a few topics, right? There are multiple topics in this itself. First of all, will this kind of a thing that happens, right? This is pure market manipulation. And SEC has been saying that crypto industry as a whole is not mature enough and it can be manipulated a lot. Do you think this adds a bit of fire to their argument?
Absolutely. Absolutely, it does. Gary Gensler has been on the record for several issues, and hopefully Joe Colasari comes in here soon so we can continue this topic with him. And basically, Gary Gensler has been saying that Bitcoin's price discovery is not an efficient market. And this is where Grayscale argued in court that if the underlying price of Bitcoin is not an official market, why did the SEC allow a futures ETF in the financial markets? To which the SEC eventually said, well, perhaps we should not have allowed a futures ETF into the market either. But remember, the futures ETF was done under a different SEC chair. And I continue to make the case that Gary Gensler is one of the most knowledgeable people about Bitcoin, Ethereum, and all things crypto that we have in all of government, and potentially, probably a top 0.1% of the knowledge in the world on what Bitcoin is, what Ethereum is, what shitcoins are, and the dynamic between them. He understands this space incredibly well. One day I would love to have him on my YouTube channel to ask him some real questions, because I know I can challenge him with anything. He may not be able to answer it in his current capacity, but in the future, when he can say whatever he likes, he will knowledgeably answer any question. And therefore, I don't think Gary Gensler has any intention of allowing a Bitcoin spot ETF. and Bitcoin's price discovery and how easy it is to manipulate the price. And I use the word manipulate very, very loosely here, okay? Just because the price is being manipulated doesn't mean it's malicious manipulation. And let me explain. If we're playing poker, and I love my poker analogies because most people know I like to play poker, the guy with the biggest chip stack, the guy with the most money at the table, is able to manipulate the game. He's able to bet more. He's able to push people around, but he is playing within the rules. He just has the ability to, push the game into his advantage. Now, that kind of manipulation is not illegal. It's not even immoral. It's something you can do because you've acquired a large position. Now, if you got wealthy, let's say through printing money, then yes, there is some morality there. And also, if you're manipulating the game or manipulating the price through some kind of illicit means, let's say you're an exchange and and you're manipulating it in your favor for your own hedge fund, kind of like what FTX was doing. Yes, that is an illegal activity. Now, what Cointelegraph did is debatable. Now, the question is, who knew and was it done on purpose? We don't know. We're probably never going to know. It looks like it was, from what I've seen in the conversation of their private chats, it looks like it was an eager journalist, and again, I use the word loosely, that jumped the gun on something that was fake news. Now, there's a lot of speculation that this journalist had a speculative leveraged long position that allowed him to significantly profit from, the FOMO that followed. Now, if that is true, there is going to be another debate whether that is insider trading or not, because technically insider trading is a very specific illegal activity that is only reserved for stocks. Insider trading doesn't exist in, let's say, the FX markets. It doesn't even exist in the futures markets, in gold or oil, or in the S&P 500 itself. It only exists for individual stocks. So this is why I thought it was very weird when people were accused of insider trading at Coinbase. And I'm like, well, wait a minute. Coinbase doesn't deal with securities. It doesn't deal with stocks. It doesn't deal with equities. But then the SEC claimed that these things on Coinbase are securities, and therefore people are using insider trading to profit. But then the SEC first has to prove that these are actually securities. And I don't think they pulled that off yet. So there's a lot of weird things going on here. Now, I was one of the original writers at Cointelegraph. I started writing there a few months after they came into existence. So I was one of the batch of the first writers there. I knew the original management there. There was always questions around the founders. There's even famous YouTube videos of who owns Cointelegraph. There's always a bit of a mystery. They've been involved in some, let's just say, questionable profit-making schemes. But I believe that they are trying to be a legitimate news organization. Now, I can, throw some opinions out there. I have no evidence for anything. But I think this was, a mistake by Cointelegraph that may or may not have resulted of a few not very important people at Cointelegraph to potentially profit nicely. But I have no idea. But what can we learn? I know I'm going off here, and I don't know if people are tired of listening to just doing a monologue. But what we can learn is that the Bitcoin ETF was certainly not priced into the market, but it shouldn't have been priced into the market because I thought it would be crazy that we would get some kind of an approval this year. I would have been very surprised. And so was the market. Now, is a Bitcoin spot ETF eventually coming? Probably, but not under the current SEC chair. That's my non-professional opinion, not legal opinion. Again, Joe Calasari would be great here. And it was not priced in, but now it is more priced in. Now people see the effect that an approval of a Bitcoin spot ETF would do. And also, as the bear market winds down, as the bull market begins, as the halving comes, the price of Bitcoin gets higher and higher, slowly. And the higher the price of Bitcoin, the smaller the effect of a Bitcoin ETF approval is going to be on bullish prices. And if the Bitcoin ETF approval comes on the back end of the next market top, be it 100,000, 200,000, 500,000, who knows? If the approval comes on the back end, then it's not going to do anything to raise the price of Bitcoin. And Bitcoin price will just continue going down while the ETF exists. So I'm going to stop here and let's see if there's any follow-up questions. And guys, please use the lower right-hand corner. There's a little button there, and you can reply to this tweet, to reply to the space. And you can also ask your question there, and our moderators will read it out if it's a good question.
So I really want to stick to this one. Number one, you just answered my second question. With the price movement that we saw, it was quite clear. The ETF, as people have been saying, ETF is priced in, it's priced in. It's surely not priced in. A rumor pumped it up 10%. I expect if it was real news, this scandal would end up being one of the biggest scandals we have seen in the last 2 to 3 years when this happens. Like, it was quite clear from how Bitcoin started moving. But
right. There's also another way to know if it's priced in. As long as there's a discount on GBTC, the Bitcoin ETF is not priced in, because the moment the Bitcoin ETF comes in, there's going to be arbitrage versus GBTC. Not to mention, people in GBTC are going to want to exit GBTC and enter the spot ETF, but they are not going to do it as long as there is a negative GBTC premium. And you're watching GBTC discount trend towards zero, and only when that discount is at zero or within 3%, one way or another, will I then admit that the spot ETF is priced in.
Okay, that's cool. That's good to know. So this is not the first time Cointelegraph has done this. So they basically spread a rumor last time as well, and that time it was a dump when they announced that SpaceX has sold all their Bitcoin that they acquired in 2021, 2022. Now, this is kind of becoming, even though these are mistakes and they can happen, understandable, but when these mistakes starts happening again and again, don't you think that the entity or the company who is doing it, they are truly market manipulating? Like, once is fine, twice is okay, three times again and again the same thing happening, Tone?
Well, again, yes and no, right? Are they manipulating the market? Potentially, right? But how is it different than, say, a cat on Twitter, writing the same thing, right? Like Cointelegraph, they have this yellow check mark from Twitter that they are a legitimate news organization. Twitter perhaps should start to remove that check mark, right? We're the ones that are giving them the legitimacy of news coverage. So if they do this too many times, they would lose that check mark. They should lose that check mark. I was also complaining about some Twitter account on my YouTube channel. Again, I don't want to get political, but there was the other day that I saw an ad on Twitter. It was the first thing I saw when I opened Twitter in the morning, and it was an ad from a Jewish organization against anti-Semitic crimes. And they posted a straight-up ad that was a straight-up lie. And the lie was so egregious, in my view, that they should, lose that orange check mark that Twitter, basically vouches for them as being a legitimate organization. But when you post too many lies and when you post, bad things and you post too many mistakes, something like Twitter should start removing these yellow check marks. And it's a start, right? Like, and then other people will see that, hey, Twitter doesn't consider you a legitimate organization, and they can even put it in writing as to why your yellow check mark has been removed, and then people will stop paying attention to what comes out of Cointelegraph. That's basically what happens. Is their reputation on the line, and the free market should work that way, and it's a very good thing. So it's fine, right? Like, had this happened in the opposite direction, then the price of Bitcoin could have crashed. People in their leveraged long positions would have been liquidated, and some people would have been able to buy Bitcoin on the cheap. People that aren't scared of some kind of a statement from an organization that continuously screws up. So it evens out in both directions. I don't have that much of a problem with it, again, unless there is some kind of internal things involved. If people at Cointelegraph profited from this, then perhaps there should be a legal organization that is looking into it, or at least making that information public. This, gets a little bit into the realm of, government overreach and potential loss of privacy. Maybe, like, this is debatable. I'm not sure which side I would stand on with that. And people need to be careful with how leveraged their positions are in one direction or another, and they should always be prepared for something like this. So again, Cointelegraph is not considered the most reputable source out there. CoinDesk is more reputable. Bitcoin Magazine is more reputable, and I'm not surprised that out of the three, this happened through Cointelegraph, and no one else should be either.
Yeah, that's true. So the only thing that I want to again highlight, like before this whole scenario happened, the news thing, remember last spaces we were discussing that Bitcoin whales have been accumulating. The biggest buying that happened at like originally before this news was just before the news came, that this rumor came out. There were massive buying on the spot market. So that spot market, and it was done basically, the BTC, Coinbase, CBD, and Delta basically went massively high at that point.
I mean, that was my initial speculation. The moment when I did my video yesterday morning, probably within an hour after the news broke, I just looked back over the prior 24 hours and I saw the big volume spike to the upside, and then massive consolidation, and then suddenly the news event. I was also speculating that some people knew this is likely to happen. So I'm not sure. It's hard without any kind of evidence, without any kind of proof, without someone having a big mouth. I still need to read that story about the guy that hacked Silk Road and had like billions of dollars, and he got caught. I haven't read that story yet because it's freaking long, but maybe something to do on the flight. But eventually, it's hard. I mean, like I would say 90% of the time, criminals get caught because they just can't keep their mouth shut. Even in today's world of surveillance and fingerprints and DNA, I still say 90% of the time people get caught because they just talk too much.
100%, 100%. So moving on, Tone, from BlackRock ETF to another story. The next topic of discussion are the exchanges. Now, you might be aware of the news that Binance is leaving UK now. So that's they have temporarily shut their doors to new customers in the UK. This basically is because of the restrictions on the exchange operating partners in the UK by the FCA. The same happened with Bybit because of all the regulations that were introduced in the UK. Bybit had to leave UK. Now we have only one major player in the UK which is left, which is BitGet, and I am not sure whether they are coming this year to Financial Summit or not. But last year they were our sponsors as well. So.
Yeah. BitGet, shout out to BitGet. They will be sponsoring the Financial Summit once again. They will, I think they're sending 2 people. And it'll be fun doing the trading competition on BitGet one more time.
Perfect. Now, why are these companies, big exchanges in the crypto market, Binance being the biggest exchange, are being shut down from the from bigger countries like UK and US might be doing the same in the near future? Tone, do you think there is again that internal discussions going on between them and these big banks, which will end up offering all these products to their customers, that we need to get rid of the ones which are already there so that the market starts afresh and we can take hold of it?
Wait, so what's the specific question? Sorry, I missed it.
Do you think that these whole regulations that are coming in, and because of which Bybit, Binance, all of these bigger exchanges in the crypto market are leaving countries? It happened in UK, it has happened in a few other countries. Do you think this is because of the FCA and the SEC or Fed, whoever is responsible, uh, basically working together with the bigger banks or the bigger exchanges and trying to get rid of, basically there's a whole agenda behind it?
So I don't think it has to do with American regulators. I think this is specific to the UK. I think the UK has their own financial regulation, which equally as old as the US regulation. The UK just can't enforce their regulation globally, which is why these exchanges, they're more concerned about American regulation globally, but they really don't want to deal with the UK local government locally. And also, they're all implementing KYC anyway, so they're from the perspective we're just going to leave the UK altogether. But even if you are a UK citizen, but you happen to be living outside of the UK, you can probably still use that exchange. You can probably still use a residency or a passport, and a lot of people in the UK are dual passport holders. And I think these crypto exchanges are realizing that it's only a matter of time before before Bitcoiners is what I meant, have multiple passports, multiple jurisdictions, and they just don't want to be in a big legal battle. They made a lot of money already, and they're taking a slow wait and see approach that in a matter of time, probably in a few years, it won't matter. And they're going to come back to the UK, or they're going to be global, or this enforcement is not going to work out. Another view you can take is that these exchanges, because they've already made the easy money, now they're trying to just be legitimate. They want to hold on to their money. It's kind of like when a mafia starts making lots of illegal money and they need to turn that money. Not that I'm comparing them to the mafia. It's just a random example. When the mafia has an illegal business, whether it's drugs or whether it's whatever, or shakedowns, and they make a lot of money, they gotta somehow make that money legitimate. So the simplest thing is always like, oh, this is a mob Italian restaurant, because it's so easy, right? Like, you open a restaurant and you show how this restaurant's making ridiculous profits, even though no one's really going to the restaurant. But now you own a restaurant as a mob boss, and you're like, well, if I'm going to own a restaurant, it's my restaurant, I want to eat here. I have the money, so you hire the best chef, and then you hire the best waiters, because you expect to be treated nicely in your own restaurant. And then suddenly people start coming to the restaurant like, wow, the food's good. And the next thing you know, you are running a very legal, profitable business. You have the best restaurant in the whole city, that started out as just, hey, I have all this money, why don't I open a restaurant for myself? And again, not that I'm comparing these exchanges to like illegal activity at all, because I think this is totally legal, and I think that it's more like a lot of these financial laws are just messed up. And now they're just saying, well, what if we start playing by the rules? We have the latest technology, we have the latest products, we have the latest offering. We're doing a good job. Why not? Why not try to play by the rules and see what happens? Just like, again, the restaurant that was never meant to cater to people is suddenly the best restaurant in the city, and everyone's going there, and you can't even get a seat. So now they have to open another restaurant and another restaurant because the first one was so good. So it's kind of like that.
You have a question, Viking? Go, Viking, go. Viking, oh.
Yeah, what's up, guys? Yeah, what's good? Quick question. So I put it down there. Now that you said it, financial summit, I put it down there in the little where you can tweet under the room, but you guys weren't getting to it, so I decided to come up. Anyway, look, we've seen in 2016, saw it in 19 again. We're on the precipice of a 30% drop. History. We're only talking about history. It could happen, right? This is my question to you. Do you think that it's a possibility? Of course you do. But you, like, what you're looking at, is it something you're leaning towards, or maybe not, or things have changed for you the way you're seeing it?
Sure. No, that's a good question. And we did see a drop before the halving in 2016 and in 2019, right before the 2020 halving. Now, I am not really looking for it, and I'll tell you why. So the 30% drop in 2016 happened after like a 300% rise. So remember, in 2016, the price of Bitcoin went up from like $250 all the way to like 700. So there was more than a doubling in price before that drop, before the halving. So if you look back at the chart, you'll see it. I don't have the chart in front of me, but I can picture it. Now, in 2019, that drop was straight up COVID. And if the government didn't lock us down, if the financial markets didn't panic, if the world didn't go nuts, it's very possible that the pullback would have only been from about 11,000 to maybe 9,000, and it would have been kind of slow. So both of them were very, very different than the current environment. So either, and neither of those things we're seeing right now. Now, let's say the Bitcoin ETF did get approved. Let's say the Cointelegraph tweet was real, and the price of Bitcoin would be rallying right now, pushing 35,000, and maybe it would have gotten to say 45,000 in January or February. Then yes, I would potentially be anticipating a much bigger drop, because anytime you go up exponentially, whether it was in early 2019 or in very late 2019, right? Remember, in early 2019, we went from 3,000 to like 14,000. Then we started to drop, and then we dropped one more time with COVID. So we kind of dropped twice, or March 2020, I mean, not 2019. So,
sorry.
yeah.
No,
No,
that's
go
what I
ahead.
wanted to get at. That's the most important one that I wanted to see, because there was a 52% drop from the highs that we had in I believe it was like in July, if I'm not mistaken, June of 2019.
Yeah, exactly. July 2019, we had rallied
Yeah,
from
that's right.
about 3 to 4,000 all the way to
Right.
14. That was a huge rise, and in fact, I have a video pretty much calling the top on that week. It was a video with Ugly Old Goat where we talked about this insane backwardation that was taking place, and so we were anticipating a drop in the price because of the big run up, and in early 2020. The big crash was because of the COVID situation. Now, if we see these things again, either of those two, then yes, Bitcoin would drop. But under normal conditions, I'm not really anticipating a 30% crash. 23,500 is still my low end target. And with every day that passes, the chances of that 23.5 slowly diminish.
Thanks, man.
But on
Cool.
the flip side, real quick on the flip side, with every day that passes of stability, the chances of 23.5 go down. But if we start to go up exponentially right now, then the probability of 23.5 actually slowly rises, because anytime things go up further than they should, they tend to overcorrect further than they should. And this is the tricky part of understanding trading.
Ooh, I would love to get your take on legislative, if you don't mind. What about, like, all right, let's say if we push out catalysts, because I do believe, this is me, my opinion. Maybe you have a different one, but I do believe like a bull run catalyst is gonna come from an acceptance of an ETF, if it happens, right? Like, if not, we're gonna lag on. In my opinion, we're just gonna keep floating around for a while. Um, but the question is, do you believe that they're gonna delay it as far as they can delay it, which is like between uh, the first of, or I'm sorry, it's like 17th of January of 2024, and then all the way to April of 2024. So in other words, you
Yeah,
think
sure.
we're
No. I understand the question. I actually answered
okay?
this question this morning on Twitter Spaces. And again, I stand of the belief that Gary Gensler will not allow a Bitcoin ETF. And if a Bitcoin ETF happens under Gary Gensler's watch, he will likely put in his resignation or perhaps work something out. So if Gary Gensler is the SEC chairman 5 years from now, I believe the SEC will continue to delay it for 5 years, right? So for me, it's not the SEC. For me, it's Gary Gensler. And a lot of people say that Gary Gensler is not really in charge. It's a committee, and it's whatever the committee decides. I don't buy that. I think it's Gary Gensler. So everything starts and ends with him because he's the most knowledgeable person in the room. That may not be true for, like, say, someone like Jerome Powell. Jerome Powell is just like the in charge of the Fed, and he's the leader of the Fed. But that doesn't. But there could certainly be other Fed chairmen from other, like, on the committee that probably have more respect of other people in the Fed as being, like, smarter than Powell. That is very, very possible. I think Powell's original expertise is being a lawyer, but some of the other ones are, economists through and through. But in this case, the guy in charge is the most knowledgeable guy in the room. It's not even close. There's no one else at the SEC, not even Hester Pierce, that understands this as well as Gary Gensler does. So I think it's all on him. And as long as he's in charge, I'm not expecting an ETF. Now, the moment he is replaced, my view changes immediately. It depends on who replaces him and how much influence did BlackRock have in choosing the next SEC chair. So a lot will depend on that.
Let me just say, I agree with everything you just said. And just one final question, if you guys allow me. Tone, what do you think my odds are? I got, let me see. All right, so I have like 6 million sats for the end of the year, a bet that I have with some plebs and stuff. So just for like the ones that are finishing in 2023, so they expire on the 1st of January. So we have Bitcoin was going to hit its all-time high within 2023, and an approval is going to come for a spot ETF, just the approval, not like the initiation, like starting of it, just the approval of one in 2023. Do you think I'm going to win those 2 million sats? What are my odds?
Oh man, I think your odds are super low. I'm sorry,
Let's
man.
fucking go.
I think your odds are low. If you said 2024, it would be significantly higher. But 2023, do you need both of those things or one or the other?
No, it's just separate bets. So those are all my bets that I have going are 1 million sats per bet. So one of them is all-time high in 2023. I'm on the underside. So I'm the one I'm on the bear side, saying that we're not going to hit. Yeah.
All-time high in 20. Oh, your odds are great, man. I give you a 90% chance right now to win 1 million sats.
Let's fucking go, bro. I'm like negative 500 or something on the odds there. Yeah. I don't think we're gonna hit all-time highs in 2023. It's not gonna, in my opinion, it's just not gonna happen. And I don't think we're gonna see an approval of an ETF.
I'll give you an 80% chance on the other one. I think honestly, I think all-time high in 2023 is less likely than an ETF approval this year.
Yeah, I agree. Thanks, man. Lots of fun.
Well, some good questions, some good conversations. So, Tone, there are no key events this week. There's nothing major happening as such that needs our thought. But one thing is there which is happening. A lot of earnings are coming out for a lot of major players in the market. Now, JP Morgan have their earning, Goldman Sachs have their earning. We have earnings coming in from tech firms as well. So I want to basically have a chat with you about the magnificent seven that we have, right? The big seven or whatever you want to call them. Now they currently have a 29.6%. They basically they account to 29.6% of the S&P 500 market cap. This is the highest on record. Now with them, since we have earnings and we know not many companies have had good year, we were bullish. You said you're bullish in terms of S&P 500 and NASDAQ. But if their earnings are not that great, does it affect the index in a major way with the weightage that they hold?
So, not really. I don't think, look, the only thing that really matters to earnings is not whether earnings are great or not. It's whether earnings are higher or lower than the expectation of said earnings, right? So even if a company is losing money, as long as they lost less money that the analysts were expecting them to lose, that stock can significantly rally in price. So it's not about the earnings, it's about the expectation of earnings. And the stock market has been slumping. More and more people are anticipating a big crash in the market. So I would be very, very surprised if analysts for this upcoming quarter and earnings are, having these lofty expectations of earnings of a lot of these companies. And it's very, very likely that these companies are going to beat the depressed earnings expectations of the analysts based on how the market's been performing. But again, I have not looked at any of this data. I haven't looked at any earnings reports, but just my experience of trading earnings over the years, back when I was an active trader of stocks during earnings season specifically, makes me believe that this earnings season is going to be good for the stock market because of the low expectations, because everyone's pessimistic.
Do you want to tell us any strategies that we should be following when it comes to earnings?
Oh man. Well, again, I was a trader. I was a straddle trader for earnings with options. Those of you that are interested in that, we do have the options course on sale on tonevays.com. And the options has always been a part of the financial summit. There's always some options expert that comes and does a presentation just to get people a little familiar with the option space. But I would say that, just check what the earnings are versus prior quarter and how the analysts have been, anticipating it. Have the earnings expectations been lowered over the last 2 to 3 months? If they have, there's a high probability that the stocks are going to beat earnings. Now, if the earnings stayed elevated kind of high from the days of the highs that the market had several months ago, then it's possible that on average, stocks will not outperform earnings and adjust your portfolio accordingly. But earnings season is very important.
Okay, that's good to know. You have a question, Viking?
Yeah, this is literally the last one for you guys. Don't this is like more for like status, sort of something that I want for myself, because I'm just gonna enshrine it like in a nice capsule, you know what I'm saying, like in a nice frame and such. I don't know if you're aware. I'm sure you don't, and that's why I'm telling you. And I want to know your odds. Give me your odds. Let me get the odds. 840,000 block height. Okay, that's the halving. $100,000. I got the under. I have a million sat bet with the one and only Adam Back. Do you think I'm gonna win Adam Back's 1 million sats?
I actually think you will win. I don't think we'll be 100K by the halving. And when you're talking to Adam Back, if you happen to talk to him before that, let him know I'm trying to get a hold of him.
All right, we'll do.
He's set to be
All
a
right.
speaker at Unconfiscatable. By the way, can we bring up like the Unconfiscatable speaker handle just for some visibility?
I have tried.
And also Dr. Jeff, we would love to get you up if that's possible. It's a pain in the ass. I had to re-enter the space like 3 times to be a speaker here. It's been crazy.
So moving on, Tone. So another nice little political news coming in from Nvidia side, who are kind of I feel they are kind of in a place where they could be going a little down. So US has restricted the sale of Nvidia chips to China. Now we all know China. Most of the phones and other things are China needs chips. We know their business, their economy relies on it. Now, why is this trade war ever going to end, first of all, or it's like a generational war, it will keep going on? And secondly, doesn't it open a possibility for China to start making their own chips? What is stopping them from doing it, though?
Absolutely nothing. This trade war is unlikely to end. It's unlikely to escalate. Now, the United States government that told NVIDIA not to sell chips to China, it's like one of those charts, fuck around, find out. If they keep fucking around with NVIDIA like that, they're going to realize that NVIDIA does not need to be an American company. NVIDIA can just become an international company, domicile outside of America, and then they can sell their chips to whoever the hell they like. That's what's eventually going to happen to American companies. They will no longer want to be American companies. Now, China has already made their own chips. They already released the latest phones. It's not going to take them long. China graduates more PhD engineers than America has in their universities. And in case people are wondering what the Western universities are teaching, if you go to my Twitter and you look at the tweet I sent out a few hours ago, the universities are publishing articles that, and this is not the Babylon Bee, this is Oxford University Press, just published an article that they think animals should have voting rights. So animals should vote in our elections for legal representatives. Now, at least they're smart enough to realize that an animal, not even a monkey, is able to go to the voting booth and press the button to vote for Biden. But what they're doing is they want to assign each animal to a person, and then a person would vote on behalf of the animal. This is what's coming out of Western. I'm not kidding. Like, this is not a joke. This is actually a serious article that was written by Oxford University.
Don, are you sure? Are you sure about it?
Yes, 100%.
Oh,
yes,
oh my God.
I posted the article. It's on their website, and they have not been hacked, as far as I know. So, it was published by them. So this is what's coming out of the West. So thinking that they're going to prevent China from building better chips is completely insane. Okay, China is doing nothing but graduating engineers, and this is what the U.S. is pumping out. So it's a huge mistake by the United States. China will end up leaping ahead of the U.S. in chip making probably within 3 years. And in the short run, yeah, it was a little bit of a bump in the road for China. But in the long run, this is a huge problem for the United States.
100%. And China has a lot of other problems as well. There is a bank run going on in Chinatown. Basically, Bank of Guangzhou, they had a bank run, a proper bank run. Now, we have been discussing China for a while. We have been seeing the problems that they're facing over there. And because of Evergrande and other retail estate companies, right now, we are seeing a bank run on China. The economy is in tatters. What's really going on there? Like, we thought they will recover because of the type of government they are. And that was 2 months back when we discussed this. It's been 2 months and it's getting worse and worse, Tone. So what do you think is going on there? And do you think this might be the start of the Chinese recession, as we might call it?
Once again, I got to say, I have absolutely no idea what is going on in China. But China is such a massive country with so many people that even if, let's say, 1 million people have a problem and there's a bank run with 1 million people, they have a 1.4 billion population. So for us, it's something like 1 million people there is almost nothing. For us, it's like Silicon Valley Bank, right? Like Silicon Valley Bank went down and everything was okay here in the US. Now, you magnify that to, let's say, 10% of America, and that's literally China, right? So we don't know how bad this is. It may be absolutely nothing and is being blown out of proportion. It could be something. But again, the Chinese have a very, what's the word I'm looking for here? Controlled state. They have a population that's more controllable than some of the Western people, like Americans, that are still, again, I'm trying to find the right words to say here, like more freedom-minded in America than in places like China. So they have a more docile population, is just, their culture. They have a stronger controllable state. And once again, this is the effect of their zero COVID policy. and I think it's going to run through their system very, very soon. China still has a problem of their markets. Their markets aren't as transparent as Americans. They don't teach their college graduates to think outside the box. It's harder for them to act outside the box. These are China's biggest challenges. China's biggest challenge is creating the entrepreneur that would think out of the box and challenge the status quo with an innovation. That's China's biggest problem. If China can find a way to solve that problem, China will be absolutely unstoppable. Absolutely unstoppable. It would also be a lot freer if that happened. Now, it's debatable whether the Chinese government wants that, but that's the only thing. That's the biggest factor holding back China, the out-of-the-box thinker. That's not how they raise their children. They don't let them think out the box, right? They are surveillance in schools where if a kid is not paying attention because he's either bored or because he's too smart for what they're teaching, or he's just, not able to follow the rules. These are your biggest out-of-the-box thinkers. And they have a clampdown on that. Like the AI will spot them. And these are the kids that, are put in a different room. So this is China's biggest problem. Once they solve it, China will be unstoppable. So we'll see where it goes. But right now, until there is like a full-blown overthrow of the government in China, I'm going to say everything is business as usual. And welcome back to Jeff.
Hey, thanks, Tone. Thanks for having me up. How's it going?
Good.
Dr. Jeff, any comments on that from your side?
No, nothing. I was just learning from Tone.
No, that's perfect. We all are. We all are. So, Dr. Jeff, since you are here, so let me ask you the first topic that we discussed, and I would really love to get your views on that as well. Was the Bitcoin pump and dump that happened because of the rumor that spread that the ETF has been approved. So what's your thought process on that? What do you think is really going on? Do you think SEC is going to approve? And if they are, what sort of timeline is in your mind? And yeah.
Yeah, so, well, first of all, I think it's inevitable that the SEC will approve a spot Bitcoin ETF. I don't know when that is, right? It seems pretty clear that Gensler is doing everything in his power to prevent it. So we'll see if it happens. I think the path has been paved. The road is clear for approval. It's just a matter of them quitting their malarkey and all their quitting to put up all their roadblocks they've been putting up so far to date. So we'll see. Regarding the pump yesterday, I think some short-term traders made a lot of money in a really short period of time. So shout out to them. We'll see how that ends. I have a feeling we possibly haven't seen the end of that. But maybe it just was truly an error. But I don't know. I'm a little bit jaded, so I think somebody somewhere profited bigly from that, is my guess. And they just approval in general. Like I said, I do think it's going to happen. I think, to me, if I had to guess on a timeline, I hate doing this because I just literally have no idea. It just depends on when Gensler decides to either allow it or he gets removed and somebody else comes in who will allow it. I would like to say it's possible it happens this year. I would say less than 50-50 chance though, but could it be approved in the first half of next year, 2024? Yeah, sure. To me, that's a pretty reasonable timeline. Or if Gensler, puts up a huge fuss, it probably wouldn't be until we get a new president and then we get a new SEC chair. And then at that point, that's kind of the worst case scenario. So I don't have any money on any of it. I don't care, honestly. I think it's much smarter for people to just simply stack sats and put it in cold storage. And this is more for the boomers, right? This is more for the people that want to have a super easy one button way, one click way to own Bitcoin, although it's not true Bitcoin. That will bring in a massive flood of money for sure. That will be good for price action. But it's certainly not the ideal way to own Bitcoin, and I know Tone knows that as well.
Yeah, that was good. I don't have anything to add to that.
No, perfect. That's about that's more than enough for the listeners, I guess. And it's always good to get the views. So moving on, Tone, I basically wanted to have a chat about. Did you see the tweet that I basically posted in the nest, Tone? So that was posted by the
I
bank.
don't. I actually don't see anything in the nest.
Oh, okay. So the bank basically posted a wall of money, like cash. They said there's enough. So after there was a bank run, they basically posted a whole wall full of cash. So that was funny from their side. So Tone, I wanted to talk about banking sector collapse as well with you. So JP Morgan, BlackRock, Wells Fargo, Citigroup, uh, basically these guys have already beaten expectations for their earnings for Q3 and revenue. Now, do you think that as you have been saying, that you do not anticipate the S&P 500 crash, and with these banks specifically beating the expectations of their earnings, do you think that people being scared of a hard landings scenario and thinking that, oh, we might be in for a banking collapse, is that over? Do we not need to think about that anymore?
No, I think it's good. I think like the more people thinking that there is a crash coming, the more likely the S&P is going to go up. I mean, crashes come when no one expects them, and I'm still listening to way too many people anticipating lower prices and, horrible upcoming future, and that's what continues to make me believe that the S&P prices will keep rising.
Dr. Jeff, what's your thoughts on that?
Yeah, sure. So, a couple questions. So, regarding banks, I think banks are still hurting behind the scenes. There's some good work done by a gentleman named Porter Stansberry, who's been looking deeply into the Bank of America balance sheet, and I would recommend you guys checking out his Twitter handle. And looking at the deep dive he's done, he suggests that even the big banks, such as Bank of America, are hurting badly. Again, basically because of um, the mismatch in duration, similar to what we saw back in March between the treasuries and depositors. If there is another deposit flight, obviously that would be, I think, devastating for banks, especially for the smaller regional banks. I don't think, though, that it's cataclysmic, and I do think that the Fed has successfully kicked the can down the road with their bank term funding program and their other liquidity patches. So I'm not concerned, at least at this point, that that's something that's going to basically tear down the system, that it's going to be kind of a cataclysmic event like 2008, 2009. I don't think that's going to happen this time around. To Tone's point, I actually agree. I got to say that I spent a lot of time today because it's my day off of doctoring, so I got to look at my financial stuff. The net liquidity setup, which you guys know I talk about a lot, net liquidity is actually very similar in structure as to exactly how it was at the end of September 2022, as well as the end of December 2022. And if you guys remember those time points, those were kind of the kickoffs for when liquidity started to increase and when risk assets caught a bid and Bitcoin caught a bid. So I don't see many people talking about this right now, but I'm kind of watching this little sneaky undercurrent happening where liquidity is actually materially increasing. Even though the Fed still says they're doing quantitative tightening because they still are reducing the balance sheet, this drainage from the overnight reverse repo market is massive, and it has been absorbing almost all of the T-bill issuance by the Treasury. So we still haven't seen any real drainage from the private sector yet. That has about I can't remember, 1.1 trillion left or so in it to go. So at the current rates we're going, we're probably going to see an end to the overnight reverse repo market liquidity as early as January 2024 and maybe as late as April 2024, depending on how much issuance they have. So that, for people who don't understand that, it's basically net positive. It's a net positive for liquidity, and when liquidity is expanding, whether overtly or covertly, that's generally good for risk assets. And so watching both worldwide kind of M2 money supply and liquidity, as well as U.S. net liquidity, both are look like they bottomed near the end of September, and they've been increasing somewhat forcefully. So like Tone, even though, and I think we agree on this, Tone. I still think a recessionary bear market is going to happen sometime in probably 2024. But in the meantime, I'm actually bullish on risk assets. I think stocks perform well from here to probably end the year. And I think Bitcoin will do surprisingly well as well. But I'd love to hear your thoughts, Tone.
Yeah, well, my thoughts on that is over the next, while, right? So starting any moment now, up through the election, there's going to be numerous like random crazy events that are going to spike the price down, right? Like I think this thing in the Middle East is just getting started. Like Biden could like completely fall down the stairs any moment. Kamala, they're not going to let her do anything, right? Like anything can happen. The Russia, Ukraine, China. It's just like we're living in this environment where like I wake up in the morning, like I don't know what to expect, right? There's no predictability at all. Like for all we know, the internet's going to go down, right? Because they'll do anything to stop the election. So I think there's going to be enough single moment, single day scares in the market that will continue to create fear in the eyes of people. I was going to say in the eyes of men, right? But in the eyes of people. It would have sounded better if I said it properly from the beginning in the eyes of men. And this fear will drive the market down like 3%. Right? It'll be like Bitcoin. And it'll drive it down, but it's not going to drive it down past new lows. And then it'll keep going up and it'll be perpetual fear. And then boom, there's another event, right? Like another missile struck somewhere, right? Or another single bank goes down. And the market drops like 4% in a week. And then it recovers and makes new highs. And I think this perpetual short-term market crashes because of the crazy world we're in right now is going to completely mess with people's heads. And they'll never believe that why the market keeps going higher in between these random off days. Thoughts, Jeff?
Oops, sorry. Just getting some water. Yeah, I agree with you, actually. I think that's kind of how I look at it as well. I think there's a big wall of worry, as the cliche goes, for the markets to climb. And again, my number one thing I look at is kind of liquidity. And as long as liquidity can support it, I do think that the markets will kind of shock lots of people, especially the bears, and continue to climb higher. But we're going to get these jolts along the way for sure. And then I think it's going to just remain resilient, right? It's going to get knocked down. It's just going to get right back up again and continue higher until we have some sort of sentinel event. And who knows when that's going to be, or if it's going to be. I'm not saying it's a guarantee. It still looks like we're headed towards a recessionary bear market at some point. But in the meantime, I think it's very reasonable to be bearish. Very reasonably to be bullish based on the things that I'm seeing underneath the hood.
Right, and by the way, another reason why somebody could counter argue my point and say, well, Tone, what is different about now than how it was before? Well, I think the biggest difference now is the gross incompetence around us. Like 10, 15 years ago, I had confidence in people running certain industries. Today, I have no confidence in a scientist in charge of a nuclear power plant, that could be 100 miles away from my house. I have no confidence that that person even has a nuclear science degree. It could have easily been a diversity hire or a random person off the street because it looked right or it's a friend of some politician. I have absolutely no confidence in, what's the word I'm looking for here? Competency in anything from the military to the guy putting in a phone line is going to electrocute himself, right? I mean, this is how much confidence I have in anything that's managed by government right now. I know Milton Friedman always had this kind of confidence in government, but for me, it's a bit more recent phenomenon as I've watched the world move slowly into idiocracy.
Well, that was well said. Tone, so those are all the topics that we have for today. Those were our discussions that we had for today. Since there was no news, there's not much to deep dive into, but there is something that I want to ask you. Tone, with the Bitcoin price action we have seen, obviously one thing is having a pump and dump. That's fine. That can be ignored as ripples in the market. But with what happened, well, this was a big ripple if that is the case. But let's ignore that price movement for a while. What are you expecting from the price action here on after you have seen the reaction?
Well, as I said 2 days ago, I continue to be bullish. Let me check the price, make sure it didn't crash as I'm saying that. Yep, we're at 28.5. I continue to be bullish short term here and potentially closer to intermediate term. And that's because I think news like this showed people that Bitcoin ETF is not priced in the market. That's why the price remains stubbornly high. And as Dr. Jeff said, eventually the spot ETF is going to get approved a lot sooner under a future SEC chair than the current SEC chair, but that doesn't matter. And this news event by Cointelegraph proved that the SEC, the spot ETF is not, the official market hypothesis has not yet priced it all in, but now it's closer to being priced in. So I remain bullish. I think the price can push into the $30,000 range, and then a little bit of a pullback, and eventually a bit of a breakout, and then a pullback into the halving. So I remain fairly bullish. My 23.5 target is still in place for a possibility, but with a low percentage, less than 50% at the moment, because I think we're almost out of the woods completely. And after the year turns, I think starting January, buying Bitcoin under 25,000 would be like an absolute miracle. I think if you want to buy it below 30, now is the time. And next year, the chances of even under 30 are going to be low.
Well, that's good. Dr. Jeff, your analysis on Bitcoin or anything that you want to add to this?
Sure, just very similar thoughts to Tone. I also am fairly bullish. I mean, look, we're 6 months away from halving. I still stick to, I've been saying 40 to 45K by halving day. So 6 months away, if we hit, say, 42K, that's about 50% higher from today's prices. And that's just a kind of conservative target. I think that's very reasonable if you compare to past cycles. A lot could happen in between there, right? We could have a massive spike higher, and then to Tone's point, it could pull back sharply, and maybe that's how it hits 40, or maybe it goes in the opposite direction, down big, and then up big. Who knows? And again, that's just a kind of a guidepost. It's not any kind of like actual real price prediction. But then I think it gets fun, right? I mean, for people who have been around and seen Bitcoin cycles, if we do get some liquidity, which I fully expect, and here let me get into this. I know we're kind of getting to the end of our time, but here's how I see it play out, right? The overnight reverse repo market, which I brought up earlier, that's been absorbing almost all of the short-term T-bill issuance by the Treasury over the last several months. And it's been a massive amount. At the beginning of this year, the overnight reverse repo market had $2.5 trillion sitting in it. And the best way to think about that, that's kind of easy to understand, it's sort of like extra liquidity sitting in the back pocket of the Fed. And so when the Treasury issues a bunch of new debt, it has to be bought by somebody. Somebody has to absorb that debt. And so far, almost $1.5 trillion, about $1.4 trillion worth of debt has been absorbed by that overnight reverse repo market. There's about a little over $1 trillion to go. When that runs out, that means that somebody has to buy it. So that means either the private sector has to buy the huge wave of Treasury debt because of all their borrowing, because they have no debt ceiling, or guess what? Who's the buyer of last resort of treasuries? It's the Fed, right? So at some point, the private markets are going to tap out and just be like, you know what? Love it, but we can't do it. We can't help you out. And they're not going to be able to buy it. That's when we're going to start seeing real trouble. That's when we're going to see financial crises and or the treasury market kind of lock up. that's when the Fed is going to be forced to move. And that's when the next round of QE starts in earnest. And based on my timing, that could happen anywhere between like the first, second, or as late as the third quarter of next year. To me, that coincides pretty nicely with the Bitcoin halving and the next wave of liquidity. Once QE next starts, it will be massive, I promise you. Many, many, many trillions of dollars worth of additions to their balance sheet. In the form of treasuries, probably in mortgage-backed securities, probably in some kind of creative commercial real estate debt as well. That remains to be seen. But that's what I expect, and that's why I'm very excited for the second half of 2024 and heading into 2025. I think we get a new massive wave of liquidity and easing, and I think that will be very beneficial if you're into that kind of thing for the price action of Bitcoin. So I remain very, very optimistic in the longer run for what's coming after that. That's not good for society in general, right? I mean, that means the currency, the dollar, is going to be debased massively. That's not good. But for those of us who have options outside of the dollar-based financial system, the fiat system, that's a good thing. So I can leave it at that. This is not obviously individual investment advice. I could be totally wrong, but please do your own research. This is a great time to take it seriously and truly do your own research as to why Bitcoin is an alternative to the crumbling Keynesian economic system.
Well, Tone, any closing arguments for today?
No, that's it. I know we didn't go into any other markets. Jeff, do you have any thoughts on gold? There was a huge pump on gold. I know oil staying steady, so we'll probably cover that in our next space. But this pump in gold took us back to the final moving average. It was a nice move. I still think it needs to go a little bit higher to prove it's ready to break out above 2K. But I thought that was fairly interesting. Any thoughts on that?
Yeah, as far as I'm concerned, gold, I used to be a gold bug prior to Bitcoin. Before I really understood Bitcoin, that was my alternative to the fiat system. So what occurred to me, though, years ago, probably 5 years ago, that what's good for gold is like 10 or 100x good for Bitcoin. So I own gold. That's the outlook I have. So I sold my gold and bought Bitcoin. But that's how I look at it, is basically the price movements of Bitcoin are going to be also seen in gold, although to a much, much smaller extent. So, 90%, 95% smaller than whatever Bitcoin does.
All right. No, on that note, I think it's good. Thanks for having us send early. I got to get to packing and get to my flight. I'll see some of you in Dubai, hopefully, and might be doing these at a slightly different time starting next week. I'll be in Dubai for almost a month, and that would conclude with the financial summit itself.
Perfect. Thanks a lot, guys. Thanks for joining us. Looking forward to talking to you guys again on the weekend. Take care, Tone. Have a safe flight. Take care, Dr. Jeff. Talk to you soon.
Thanks, guys.
Thanks for listening, everyone.